This TradingView indicator is the mother of all TradingView indicators. This is the most powerful indicator that I have ever used to build a high winning strategy. This indicator does not only give you perfect trading signals. The best part is that it also gives you a stop loss target for all your trades, making it seem like you are trading with a robot that helps you to identify and take all your trades automatically, making this strategy a very easy one, but very effective in the market. Although this strategy is very simple and easily applicable, we are still going to be following a set of principles to make sure we are not trading blindly in the market. And for this strategy, we are going to be using two very powerful indicators that I will be breaking down, concept by concept, which I strongly advise you follow all the concepts to the end to make sure that this strategy works for you. But before we get into all of that, do well to like this video to help other traders like you find it and also become profitable. And subscribe to our channel if you are encountering us for the first time. Now, tribe soldiers, let's get into this business. The first indicator that we're going to be using is the Heikin-Ashi. The Heikin-Ashi is a chart type and also an indicator. It is popularly known for its ability of smoothing price movements. This is one of the best and the most used chart type after the Japanese candlesticks. Although I have already made a video explaining everything about the Heikin-Ashi and its trading strategies, but let me break it down a little here. One of the biggest advantages of the Heikin-Ashi is that you don't have to care so much about getting the right entry candlesticks, as the Heikin-Ashi has only three major types of candlesticks that traders can make use of to analyze the market. Now, what are those candlesticks? The first one is the bear's Heikin-Ashi candlestick. This candlestick represents the full strength of the sellers. When you see these candlesticks moving together in alignment, it means that the sellers are in control of the market and the buyers have minimum strength. You see, the Heikin-Ashi is not like the normal candlesticks, where you can see a lot of bearish and bullish candlesticks as the price is moving. The Heikin-Ashi will only show you the full strength of the sellers, helping you to get rid of all the market noises. The second Heikin-Ashi candle is the bull's Heikin-Ashi candlestick. This also shows you the full strength of the buyers, helping you to get rid of all the market noises and showing you exactly what is happening on the chart. The last one is the Heikin-Ashi indecision candle. Looks like the doji. You mostly see this candlestick when the trend is about to change. This represents indecision in the market. Each time you see this Heikin-Ashi indecision candle, you should be very careful. It means that the market is about to make a change to the side of the buyers or the sellers. And now that we know all this, it's time to introduce the second indicator. This indicator will serve as the messenger, while the Heikin-Ashi indicator will carry the message. This indicator does not only give us the best areas to buy or sell the market, but it also gives us the areas to place our stop loss to make sure that we are safe when entering the market. The name of this indicator is called Zero Lag MA Trend Levels. This indicator not only gives us the perfect areas to enter the market, but it also helps us to mark the areas of risk management, such as the stop loss. In order to add this indicator to your chart, all you have to do is search for Zero Lag MA Trend Levels on the Indicators tab on TradingView and click on the one by ChartPrime. And when you have it on your chart, leave all the settings of the indicator the way they are. But here is the problem. Apart from the risk management aspect, this indicator is more like many other indicators that we have on TradingView. But why does the trading chief place an interest on this indicator when there are tons of indicators in the market that he can work with? The thing is that this indicator is different. It takes more time before the moving average lines cross over, meaning it waits for the buyers or sellers to fully get into the market and take control of the market. And when they are fully in control of the market, it then gives you a signal to enter the market. But we are not going to base on that signal alone. They can also be false signals from the indicator as no indicator is 100% perfect. So what do? I came up with a very efficient solution to make the strategy a highly profitable strategy for everyone. And for this, we are going to be applying a little bit of price action with this indicator. We are going to be using the break of structure pattern, and as you all know, a break of structure occurs when the market breaks the last trend move in order to change the trend and move the market in the opposite direction. So the only time that you take any crossover or signal from this indicator series is only when you have seen a break of structure before the signal and crossover. So now, the first and most important step of this strategy is to wait for a break of structure, and after that, the second step is that you wait for a crossover of the zero lag trend indicator. Note that when the market crosses over to the bearish side, the color turns blue, and when it crosses over to the bullish side, the indicator moving average colors turn green. And after the crossover, you want to see a signal from the indicator indicating for you to buy or sell. And when you see a signal like this, it means that you can buy the trade and place your stop loss below the box, but not yet. This is where the Heikin-Oshi candles comes into play. After the signal has appeared, the third and last step is for you to wait for a bullish Heikin-Oshi candle. When you see your bullish Heikin-Oshi candle, after a buy signal from the indicator has appeared, it becomes the last trumpet for you to enter the market. So we enter the market, placing our stop loss below the indicator signal box and our take profit target at the next high. Now, let's take a look at another example on the chart. So here we have a break of structure to the downside, breaking the last uptrend's lower high, and after it retraces, you can see the moving average of the indicator crossing over and changing to blue colors, and after that, we get a signal from the indicator to sell the trade, but we won't enter the market blindly. We wait till the Heikin-Oshi forms a bearish candle, indicating the full strength of the sellers and giving us the go-ahead to enter the market, and after that, we enter the market, placing our stop loss above the indicator's signal box and our take profit target at the next low, and here we have it. The trade was successful. Our take profit target got hit successfully. Now, let's take a look at another example. So here we have the market breaking the last trend structure, which was a downtrend, in order to reverse it to the upside, into a new uptrend, and after that has happened, you can see that the moving average lines are beginning to cross over, and the colors are changing to green colors, and after that, a buy signal from the indicator appeared, giving you the confidence to buy the market. But you know we can't take that as our last step. We must wait for the Heikin-Oshi to print a bullish Heikin-Oshi candle, which indicate the full strength of the buyers, and when that has appeared, we take the trade, placing our stop loss below the indicator signal box and our take profit target at the next high. And as you can see here, our trade was a successful one. The take profit target got hit successfully. Alright, now, let's take a look at the last example, before I tell you some few pro tips that you must use when trading this strategy. So here, in this example, the market was also moving in a downtrending movement, and then the market broke the structure in order to reverse it to the upside, and after that, you can see that the indicator's moving average lines crossed over, and the colors changed to green, indicating a change of trend, and after that, we got a buy signal from the indicator, but that's not enough. We wait for the Heikin-Oshi indicator to also present a bullish Heikin-Oshi candle, and if that appears, we can take the trade, placing our stop loss below the signal box and our take profit target at the next high. And as you can see, this trade was a big one. The take profit target got hit successfully. Now, I want to caution you tribe soldiers that while using these indicators and this strategy, you should only focus on short-term trades. You should only take trades that appears on the smaller time frames, from the 15 minutes to the 1 minute time frame. This strategy is majorly for day trading and scalping. If you're using it to do anything bigger than that, like finessing it on the bigger time frames, you should be extremely careful. And make sure you follow the steps if you want this strategy to work for you. Now, in this video that will appear on your screen, I preached about another powerful TradingView indicator. This indicator is so powerful that it does not need another indicator in order to function perfectly and give out accurate signals in the market. Click on it and see you there, tribe soldiers.